whole life insurance policy with a mutually owned company can never lose money. It's guaranteed to grow.
The reason I'm a huge fan of life insurance is I believe there's no greater safe asset that someone could have at the foundation of their life. Because of some of the things that you just said, it's safe, has some amazing tax advantages, it protects you and your family, it allows you to have control and liquidity and use and leverageability.
Literally, because it's a mutually owned company, you own the company.
Yeah.
You own a fraction of the company. You want to live for as long as possible. They want you to live as long as possible. The longer you live, the longer they can manage that money and grow it, right?
So when I start learning about life insurance, I'm like, this is amazing. Like literally, just like a phone, I'm able to put $1 in a place and it literally gives my dollar more than one job. Or if I put my money in a bank, if I put my money in an investment, it's doing one or two things.
I love the concept. I am obsessed with it because I use it for everything.
Right.
All my real estate deals, my daughter's braces. I bought this watch using it. My 911 I bought an R8. I buy all my trips, everything.
Yep.
And what people need to look out for if they're watching this and they've heard infinite banking and people talking about it, just be careful that you're not dealing with someone that doesn't do it themselves. Infinite banking.
Yep.
So I could talk for hours about infinite banking.
Yep.
In your words, what's the simplest way you can explain what infinite banking is?
Yep. The way that I explain infinite banking is your money, when you create value, you have money come into your personal economy. And your money has to flow somewhere. So your money can only really do two things. It can be consumed and gone forever or saved for a future consumption date. Infinite banking concept and what I talk about in the AND asset, this concept of life insurance, is a middle account that allows you to save your money and use it more efficiently throughout your life. So your greatest financial need is using money. Your greatest financial need is that concept. And so the idea of infinite banking is not changing what you spend your money on, not changing what you invest your money in. It's where does your money reside and how do you use it? And when set up and used properly, a whole life policy that's max funded is an amazing place to storehouse some of your dollars that they're protected. They protect you as an individual and your future ability to provide value to the world, but it allows your money to grow the rest of your life with many tax advantages and gives you the ability to use that money throughout your life to do whatever you want to do. And when you look over 10, 15, 20, 30, 40, 50, 60, 70, 80 years, using a life insurance policy at the foundation versus like a bank account or other assets that you could put your money in, creates multi-uses of your dollar, and it's those that create the massive benefit. So the concept of infinite banking is essentially like looking at where money flows, being efficient with your money, and using whole life insurance at the foundation of it when set up and used properly. And I say set up and used properly because there's a lot of people that don't set it up and don't use it properly. But when set up and used properly, it's an amazing foundational asset that's not an investment, but an amazing place to storehouse and use your money throughout your life.
Yes, not an investment whatsoever.
Yeah.
I have so many people saying, oh, but the rate of return is only this. You're looking at it as an investment. Yeah. Investments, you want to get the highest rate of return.
Totally.
Investments, though, can what? Lose money.
Yep.
Whole life insurance policy with a mutually owned company can never lose money. It's guaranteed to grow. So it is not an investment. It's a storehouse for your capital. So for those watching this will be like a good illustration. So this money I have here, this is actually my haircut money.
Love it.
Because my barber, even though it's 2023, does not accept credit cards. He only takes cash. So I only have cash on me for haircuts.
Love it.
So let's say, guys, this money here, this money is going to flow somewhere, right? Most people, it flows right to a bank. They get a direct deposit. They don't even touch the money. Government takes their taxes. They do a 401k, right? So let's say they're left with whatever else. It goes directly into their bank account. They don't touch it. It's sitting in the bank account. Now that it's in the bank account, it's subject to lawsuits, judgments. So if you get sued, someone can take that money, right? In a properly structured whole life insurance policy in most states, you can't touch it, right?
There's creditor protections in every state.
Yeah. So it's more safe sitting there than it is in a bank. If this money's sitting in the bank, it's earning on average 0.06%, less than 0.1%. That's an insult. And that is actually taxed. In a policy guaranteed to grow with anywhere from 2% is the guarantee to 3.25%. Way more guaranteed tax-free, right? So it's growing more. It's protected against lawsuits and judgments. In a bank where most people flow their money,
Yep.
that money it's in a place that's not really stable. Banks are insolvent all the time. Why? Because they don't have to keep all this money. They keep a fraction of it, lend the
Yep.
rest out. So if everyone tries to get their money, guess what? They don't have it.
Yep.
So they're insolvent. They have to sell off assets. If they sell those assets at a discount,
Yep.
that's when banks go out of business. In a life insurance policy, the money goes there. They can only lend what is in the general account. They don't go out of business. The companies we use, I think, the same companies, right? One America,
Yep.
Lafayette, Guardian,
Mass,
Penn,
yep.
Mass. These companies have been around. Mass has been around for 169 years.
I don't know.
Something like
Yeah,
that.
a long time.
Long time. Through the Great Depression, World War I, World War II, meltdown of '08, swine flu, bird flu, COVID. Through all of those things that have the economy crash, these companies are profitable. So do you want to put your money into a bank that's not protected, grows very, very slowly, insolvent, have to get bailed out by the government because they're not profitable through many things? Or would you rather put them in a place where protected against lawsuits and judgments, grows guaranteed tax-free way more than anything else, doesn't fold? These companies are not insolvent. They're growing and profiting every year. When they profit, because it's a mutually owned company, they share those profits with you because you're a part owner of the business, right? And then here's the kicker. This is the and asset part. So you put all this money into infinite banking policy, overfunded whole life insurance policy with a mutually owned company. It's very important what it is. Once it's there, I can leverage against it. This money continues to do all those things I just said, but now I can leverage against it, borrow my future death benefit. Now I control.
And we should talk about future death benefit because I think that can be, borrow against your cash value.
Yeah. So your cash value, whatever's sitting there, say I got 100 grand in there, cash value. I can borrow against that. That's the collateral to get a loan from my future death benefit.
Yep.
So now I'm borrowing the insurance company's money. My money's sitting there getting all those benefits I just explained. So now I'm borrowing this money. I control this money for an interest rate.
Yep.
But if I can take this and go make more than what they're charging me, I've just done exactly what the bank does. I've made an arbitrage, a spread on money. If it costs me 5% to control this money, and I can take it, lend it to you, and you pay me 15, I'm paying 5 to make 15. So I made 10%. What's the rate of return on that? I know you know this, but most people don't.
It's a lot. It's a lot.
So 5 to make 10 is a 200% cash on cash return.
And a lot of people are like, well, it should only be 5, but it's like, no, your investment is in your control cost. And I thought you explained that well.
Yeah. So 5% is what I'm paying to control the money, and I go make 15. So net I make 10. I've turned 5 into 10.
Yep.
That's a huge return. At the same time, my money, the collateral, is still compounding and growing. So the longer you give it, the bigger it becomes, so the more you can borrow against it. And all you're doing is you're borrowing that future death benefit. So I love the concept. I am obsessed with it because I use it for everything.
Right.
All my real estate deals, my daughter's braces. I bought this watch using it. My 911 I bought an R8. I buy all my trips, everything.
Yep.